Time for the markets here on Farm Week. The top story this week, the USDA's monthly crop and supply demand reports were released at midday on Friday, February 8th. Traders spent much of the early part of the week consolidating positions ahead of all the new numbers. And other stories we're following for you in the markets, the cotton trade draws some fundamental interest and some money. Gulfport apparently escapes a dock strike that would have impacted ag exports, while milk demand in the U.S. continues to slide. The Congressional Budget Office has estimated cotton planted acreage for the 2013-2014 planting season is only 9.25 million acres. Now that would be down from the 12.3 million acres planted last season. Many analysts seem to think acreage this low is highly unlikely. Looking at the boards, as of Thursday morning, March and May contracts were trading 40 points lower. According to analyst Aaron Newsom, there are signs that this market has support and may be able to hang on without any bounce to the downside.
The biggest thing that we've got going on in cotton is it has been beaten down so long. I mean, you go back and look at a chart on cotton, and it's just been straight lining for quite some time. We're finally starting to see this uptick. We've got some money coming back into the cotton, and we've got some fundamental interest in cotton as well. Over the years, we just keep reducing the acres, and come this next March prospective plantings report, cotton's supposed to get cut again, possibly down into single digits, so less than 10 million acres. So, you know, we continue to see less area going into cotton, smaller production, and so when the world does start to look for some cotton, prices start to go up. And so we're starting to see some investment money move into the cotton market, looking pretty bullish. It's been a slow grind. I mean, it's slowly starting to work higher, but at least we're seeing the buying coming from both sides, both fundamentals and technical side. So that's a good, positive, bullish sign for the cotton market to be able to extend this rally.
Friday's supply and demand reports, which were released after this edition of Farm Week was recorded, are expected to clarify the question of whether U.S. corn stocks are increasing or decreasing. Dow Jones Newswires reports traders appear to be expecting U.S. stocks to be increased in the report because of a decline in consumption. Analyst Tom Fitzenmeyer says there has been a lot of chatter for a while that we're going to run out of corn.
602 million bushel carryouts too tight, and how are we ever going to get by? Well, they whacked exports on corn in that report in January pretty hard, and we still, even look at today's exports, were terrible. We can't even meet those reduced export expectations. So that's one area that's got a problem. Feed usage, you probably aren't going to change too much, although, like I said, if wheat's cheaper, there's a lot of people looking at substituting wheat, so that's not going to help the corn market. Thirdly, you've got ethanol producers. If we rally corn very much, all of a sudden they can't, they're not profitable. So there's adjustments get made.
Our trivia quiz this week deals with a Mississippi crop we haven't talked about yet in the markets this week, peanuts. And here's the quiz question. How much of the world's peanut production is used in candy? Is the answer 5%, or 20%, or 31%, or 43%? You'll find out which one is correct in a few more minutes. A tentative agreement between shipping lines and longshoremen is preventing a strike that would have shut down Gulfport on the coast, as well as most other East Coast and Gulf Coast shipping points. Officials say a work stoppage at Gulfport would have adversely impacted major outbound shipments of U.S. pork and U.S. beef destined for overseas markets. The cattle inventory report released February 1 showed the smallest U.S. herd in 61 years. However, many analysts zeroed in on something else in that report. The number of beef replacement heifers increased 2% to almost 5.5 million head. The website meetingplace.com reports that analysts on average expected the replacement number to actually decline. Now, whether this increase reflects a rebuilding effort and that the nation's herd is starting to increase remains a hotly contested question. Some traders say the ongoing drought conditions in many parts of the country make any significant herd expansion unlikely. Turning now to the dairy industry, declining demand for milk and higher feed costs have been putting the pinch on this portion of the livestock sector. Mike Pearson has more.
Fewer consumers are hitting the dairy aisle at the grocery store these days, and that's translating to less demand for milk. While demand for yogurt, cheese, and other dairy products is on the rise, U.S. per capita milk consumption has fallen nearly 30% since 1975. One factor is increased competition. Another is the fact that children, historically large consumers of milk, make up a smaller portion of the population. Milk companies and retailers are looking to boost sales through a number of strategies, including the push of smaller, more convenient packages and healthy-oriented varieties, including protein-enhanced products aimed at fitness buffs.
It's imitation milk making time.
I've got the soybeans.
I had them first. Kids, there are plenty of ingredients in imitation milk to go around.
The dairy industry is promoting natural aspects of its product to counter growth in alternatives made from soy, almonds, and even water. Retail dairy prices are not helping the industry's case. Last year, milk prices soared 9.2%. The Got Milk ad campaign, started nearly 2 decades ago by the California Milk Processor Board, is leading the campaign to get milk back into the nation's refrigerators.
Always remember, real milk is the real deal.
The board also plans to display the real seal prominently on its products to distinguish them from plant-based products.
There was some encouraging news for the U.S. farm-raised catfish industry this week. A recent study shows the decline in U.S. seafood consumption is believed to have bottomed out last year, 2012. In addition, U.S. producers' revenues are forecast to increase over 1% a year for the next 4 years. The Catfish Institute says the farm-raised catfish industry is the largest aquaculture industry in the United States. Before this week's feature story, our trivia answer for you this week, it is B. 20% of the world's peanut production is used in candy.